Okay, hi guys, it's Chris here from CJCRE Property Management. I'm here in the city with my good friends here, Equilibria Finance. Kathleen and Adrian, how are you again?
Not too bad yourself.
Good, thank you. So it's just a quick short video. Obviously, end of financial year is coming up, so it's fast approaching. So we just want to share some tips in regards to end of financial year and tax returns and things like that. So let's kick it off, guys. So what can you share with the audience out there in regards to tax refund in the financial year?
Okay, obviously guys, this is actually general advice, so if you do need to see an accountant, please go see one. Thank you for letting us talk about tax tips. What we wanted to talk to you about was tax tips for investors, tax tips and considerations to maximize your tax deductions, refund and financial position.
Yes.
So our first advice would be get your paperwork organized, guys. Do not leave all your details in a shoebox, okay? Having well organized records will ensure claims are not missed. You can access documents with ease, and this will also allow you to have all the necessary receipts and invoices to present to your accountant. Okay, secondly, you want to maximize your tax refund. The simplest way to maximize your tax refund is knowing what is deductible and what is not deductible. Okay, and also more importantly, to be clear and concise of your records of the expenses. Okay, so common deductions for investors include advertising for agents, accountancy costs, body corporate fees and charges, council rates, water charges, land tax, cleaning, lawn mowing and gardening, pest control, insurance, building contents and public liability. It is also important to be aware that you can claim for interest only payments, but not for principal repayments. And Adrian, is there anything else?
Yeah, so from my point of view, definitely go to the ATO as a website.
Yes.
And it's section residential rental property. That will give you a list of the full deductions, just for you to be aware of and go through. One thing as well to ask your tax account is to see if you have a depreciation schedule.
Yes,
this is for things like if you have curtains, carpets, there's fixtures that can be depreciated and can utilize in your tax return. So definitely I'd recommend those. One of the things we've done here as mortgage brokers, we've got a lot of first-time investors.
Yes.
And one of the things we're recommending for first-time investors when they go see their tax accountant is to bring the property settlement schedule. Has a list of the fees and setup costs, which then can be utilized to get a deduction from their tax return. Also, one of the things we recommend as well is find an experienced accountant, someone who deals with property and investors, so they will know the tricks of the trade. They'll have the schedule to actually pick up and make sure you maximize, because a lot of the first time, or even people who've been doing it a while, you don't know what you don't know.
That's it.
And we want to make sure that you do find that accountant. So I'd recommend that highly to speak to people out there.
Definitely, especially when you're screening for a new accountant, you want them. It will be good if they have their own investment properties or their own investment portfolio, so they have that experience. So they can obviously pass that on to you guys, or to your situation. So you're maximizing your returns as best as possible.
Yeah,
100% definitely. And one of the things I'd recommend that not everybody knows about is that a lot of people have negative geared their property, and there's a thing called a PAYG withholding variation. What this actually means is that instead of waiting for your tax return, the benefit at the end of each year, say it was 10,000, you can actually get this form and it'll come out of your pay. So they vary your PAYG and you get that cash flow every pay slip. So in other words, it just helps if you've got that sort of cash flow with negative equity, you can do so. So I'd definitely speak to your accountant in relation to the PAYG withholding variation if you think you could use that money up front. And it just, people have been doing that and it's helped them, with the cash flow.
Oh, excellent. And just in regards to my tip as well, as a property manager, if you have an investment property with a real estate agent, every end of financial year they will provide you with an end of financial year report, which is usually 1 or 2 pages. And that report outlines obviously the income and then the outgoing expenses. My tip and advice is don't just rely on that piece of paper, because there may be bills or expenses that you may have paid and your agent hasn't paid it on your behalf. So this could be, landlord's insurance, repairs or maintenance. Sometimes your property manager have called you for a repair, and you've then decided, you're going to do it yourself. So make sure you have those receipts and those bills to also provide that to your accountant as well.
Fantastic.
Yeah, I think the last one is make sure you read your tax return.
That's it.
So read the tax return before signing. Yeah, absolutely.
Yeah.
Yeah. So look, good luck out there, and hopefully this has helped.
All the best.
With your tips. So good luck and
Excellent.
have a good day.
Thanks,
Awesome.
guys.
See you
Thank
guys.
you.
Thanks.